Hello and welcome to the second video of the series. In this video I'm gonna show you how to identify levels and patterns of support and resistance and how to trade based on them. Doing that, I'm gonna assume that you are familiar with the concept of support and resistance, and therefore I'm not gonna get into the theoretical part of that. There are a lot of articles on the web that do an excellent job explaining it. I will be concerned only with the practical way to use the concept and support and resistance and apply it to your trading. I will, however, if you are not familiar with the concept, I will include my personal favorite article on support and resistance on the associated article at the Snail trading website. And even if you are familiar with the concept, I highly recommend you to spend some time and read that article, or at least skim it. So let's go on. In front of me, I have the MetaTrader 5 platform with a clean profile. For the purposes of this video, I'm gonna use this platform to show you how to identify support and resistance levels and patterns. But I'm pretty sure that you'll be able to replicate what I'm doing on the platform of your preference. I'm gonna click File, New Chart, and I'm gonna open a new chart on the Euro-Dollar. I'm gonna maximize the window. I'm gonna use a candlestick chart, and I'm gonna zoom out a bit. I'm gonna choose the 4-hour chart, and I highly recommend you that you use higher time frames, at least when you are a beginner, because it helps remove all the short-term fluctuations and the noise of smaller time frames, at least when you feel confident that you are able to ignore it yourself. I'm gonna click Ctrl G to remove the grid in order to have a more clean chart in front of you. You can also remove it by right click and clicking the grid here. I'm gonna shift the chart to the left because that helps us give us a little more space on the right side to draw some patterns and other drawings on the chart. And I'm gonna choose the crosshair here because that helps us identify levels of previous levels at which prices were rejected or supported more than once in the past. Immediately I see here this level where prices were rejected here and here, and they were also supported here. So I'm going to choose the horizontal line here, and I'm going to draw a line here. By right clicking properties, we can go to the common tab and select light gray. I already have that, and I highly recommend that you use a very neutral color, because those lines we will have a lot of lines, of horizontal lines on the chart, and we don't want to be distracted by colors. For example, if it was red, this this gives a lot of attention on this line, and when we get more lines on the chart, this will result in a very cluttered chart, and we don't want that. So right click properties and select light gray, or something that is more neutral to your eyes. Also right click properties, and we are going on the parameters tab, and we will try to round the numbers to the 4th decimal point. We can also click the bottom control and create a copy of that line, I'm gonna put that here instead of going to here and clicking again for the next horizontal line. Again, right click properties, and I'm gonna round it to the fourth digit after the decimal point. I'm gonna use again the crosshair here to identify more levels like that. I see another one up here, and right click, let's round it at 1170. I'm gonna copy this line and I'm gonna put another one here. Right click, parameters, delete this. Okay. I see another level down here. You can see that here this level was resistance, here was resistance, then it became support. I'll put it here, and again properties, rounded number, it looks like 680, 0680, and here we already added a few lines here. It is a good idea to go to the higher time frame and see how those lines, how prices in the past reacted with those lines. We see that here, for example, this is an important support and resistance level. Also this one that we added here, and this one, of course. So we go again to the 4-hour chart, try to find more levels like that. I see another one right at the top here. Parameters 1270. I can see another one lower here. Now I see a strong reversal here at this level, so I guess that this is also an important level. I'm gonna add a line here. And I'm gonna go to the higher time frame to see how this level here, and we see that it was again an important level of support and resistance in the past. And by now we have added several lines. We see that we have plenty of them. So it is now time to take a look at the prices that we selected. We see 112.70, 111.70, 111, 110, 10, 109.50, 108.50, 160, 060, 0680, sorry, 106, and we see that this level here is a round number, what we called a figure. We know that these levels are also called psychological support levels, and that's because we humans tend to think in round numbers, and because actually support and resistance levels are levels where buyers and sellers meet. Those levels are usually such levels because, for example, when we place an order, let's say if we buy here and we want to set a target, we are more likely to set a target at a round level like 111 rather than something like in between them 110.76.4, because we don't usually think in so many decimal points. So by that time we have plotted several lines on the chart. Those are some support and resistance lines. And because those lines are horizontal, they are called, or at least I call them, static support and resistance levels. But there are also other types of support and resistance, and the other type is I like it to call it dynamic support and resistance, and it's called dynamic because support and resistance does not actually appear on a specific price, but rather on a drawing. And I'm gonna show you an example right now in order to understand what I'm talking about. I'm gonna draw a trend line from here. Okay. It is good practice your trend lines to have some very distinct color. I like to use the magenta in order to differentiate the trend lines from other drawings on the chart, like those horizontal support and resistance levels. We want to pay immediate attention to our trend lines, but we don't want to pay immediate attention to horizontal lines. So I was talking about dynamic support and resistance levels, and as you can see here, this trend line represents such a support and resistance pattern. We see here that prices were supported here, we had a bounce, then prices reversed, they dropped slightly below the trend line, but they moved back above it. Prices were supported here, we had a bounce, prices continued to the upside, then we had a reversal again when they touched the trend line. Here we have two types of support at the same place. This is the trend line, and it is also the horizontal support. Then we had a bounce, prices continued to the upside, and then a reversal lower again when we reach the trend line. Again we have two types of support at the same place, and another rally followed, and now prices have reached some serious resistance up here, and finally we had a rejection up here, and prices since then are moving lower. So since trend lines define the trend, and we're obviously looking at the bullish trend here on the euro, it is normal to expect that if prices drop to and reach this trend line will provide support, and another rally will follow because we are currently in an uptrend. We see in the past here, what we see is that the strongest levels of support is where dynamic support levels meet static support levels. So hypothetically, we may see prices continue to move sideways for some time, and finally drop here where this static support meets the dynamic support, and then we may see a rebound from here. Before I get into tactics and methods of trading based on support and resistance, I would like to show you another drawing, another indicator, call it as you like, which is very common, is very common to use for support and resistance identification, and that is the moving average. Again, I'm not going to go into the details of how moving averages are calculated and what they represent, but I'm gonna include a link to my favorite article on moving averages, and even if you are familiar with the concept, I recommend you to take a look at that article. It is very informative. So I'm gonna add a moving average right now. I'm gonna go insert indicators, trend, and moving average, and I'm gonna use the number 21 because this is a Fibonacci number. I'm not gonna go into details in this video about Fibonacci. This will be the subject of another video. For now, let's just accept that this is a number that works. At least it works for me. And I'm gonna choose a very distinct color, something like a red color. Okay. Now, looking at this moving average, we see that in some cases, when prices touch this SMA, this simple moving average, they react on it like if it is a level of support or resistance. We can see that we had a rebound here, we had a rebound here, also a rebound here. I'm gonna go again and add another moving average. This time I'm gonna use a higher number. I'm gonna use the next Fibonacci number, 55, and I'm gonna choose a color that is again distinctive, and different from the other one, because we need to be able to differentiate between the two moving averages easily. So I'm gonna choose blue. This is a slower moving average because it actually uses more price data, more past price data to form. And we see again here that it provided support for this rebound, and also up here, also here, and it was finally broken here, and the support became resistance, and since then prices are trading below this moving average. So this moving average at the current point, it provides resistance. I'm gonna just add another moving average. I like to use 3 different moving averages. There's gonna be the next Fibonacci number, 144, and I'm gonna choose a different color, again very distinctive color. I'm gonna choose lime. Okay, this is the slowest of all, and we use it to identify the longer trend. We see that prices again interacted with this SMA here, and since this rebound here, this SMA defines the current trend. So around current prices, we have a trend line that suggests that the current trend is bullish, is an uptrend. We have the slow moving average, which appears below prices, so it also suggests that the trend is up. But we have a slower moving average that provides resistance and suggests that this trend may be at a point where it will eventually reverse. So before I go further into showing you how to identify a trend reversal with all that information that we have here on the chart, I'm gonna first assume that the trend is up and it will remain up. So the idea is that we have support here. Actually, after prices hit resistance here for multiple times, it was here and then again here, and they reversed. They actually found support at the 111.70 level, and since then we had a rebound. So as I said, it is fairly safe to assume that if prices reach again this level, they will find again support and we will have a continuation of the current trend. Of course, when you look at several articles on the web on how to trade based on support and resistance, they would simply tell you buy on support and sell on resistance, which sounds good, but it is not really very practical. And also it is not very effective because it is very simplified. So what I'm gonna say for now is that we don't want to base our trade only on one level of support or resistance, especially for our entry. So if prices continue sideways and the decline happens around here, and actually we hit this horizontal support at the same time we hit this trend line and this SMA, then we will have two or three levels of support, two dynamic, one static, that have the potential to provide the necessary support for the pair to continue to the upside. So here, except from the price information that we are looking for a price at 111.70 for our entry, because this is the horizontal support. We are also looking for a time parameter because this is a dynamic support level, and unlike static support levels, this support or resistance changes with time. So if prices drop below this towards this support before we reach the trend line, the bullish setup will not be a very likely, will not represent a high probability trade scenario. So basically, for our bullish scenario, we will be looking for prices to hit this level here and then rebound from here. So if that happens, we will be looking to place a trade at the support 111.70, set our stop loss at the previous support level, which appears at 111, and put our take profit at the next resistance level, which is 112.70. Of course, based on the previous video of this series, we must have a risk-reward ratio that is in our favor. In this case, we will be risking 70 pips in order to win 100. This is a good but not an excellent risk-reward ratio. But since the trend is up, if this happens at this time here, this could be considered a good bullish setup. This is a basic example how to use static support and resistance level together with dynamic support and resistance level in order to create a trading setup on a trend continuation scenario. The other scenario that we can work on using support and resistance levels is to count on a trend reversal. So we will be looking for a break of a support in order to get into a bearish scenario and count on a trend reversal. For that to happen, we would like to see some support and resistance, some support levels to break. Okay, so we would like to see this horizontal level be broken, this dynamic support level, the 144 SMA, to be broken, and also this trend line to be broken. What do we mean by when we say a break of support and resistance? There are a couple of ways to assume that the pair has the instrument has broken a support. One way to do that is to wait until we have a complete candle closed below the support. The more, however, this is not a high probability break. In order to accept that support is broken, we need to see more than one levels of support being broken. And by that I don't mean different levels like those two, I mean static and dynamic. I would like to see prices falling below this support, below this trend line, below this dynamic support, and that would also mean that we will be breaking below this SMA 2. So if prices break below these levels and we have a close below these levels, so that would mean that then we'll be safe to assume that the support is broken and we will eventually have a trend reversal. So if that happens, it is likely that prices will reach the next support level, which appears here. So we will wait for prices to reach this level, and when prices reach this level, they will eventually find support, and that will result in a rebound, even if it is temporary, towards the broken support, in order to confirm that the support is broken and it becomes resistance. This is what they call role reversal. This is when support becomes resistance, and vice versa on the opposite scenario. So a nice and highly probable scenario would be this: wait for prices to break below those three levels of support, two dynamic, one static. Wait for this support to hold and wait for a rebound towards those levels. Once this happens, we expect that prices will hit resistance here, and we will have a continuation towards the support level. So let's assume that this has already happened and prices are here. How do we place a trade? We need to open a trade at this level at 111.70, place our stop loss at the next level of resistance that appears up here. This is 100 pips of stop loss of risk, and we need to place our take profit at the next level of support, which is 111. So as you see, our risk-reward ratio will not be favorable. So what can we do here? Shall we dump this trade because risk-reward ratio is bad? This would be one option. However, given the fact that here we are talking about a break of quite a large trend line and a possible trend reversal, we can just use some kind of position strategy in order to get the most out of this potential bearish reversal scenario. So instead of placing one trade, we're going to divide our trade into 3 trades. So for example, if we were to trade one lot on this trade, we can create 3 different positions, each one with a position size of 0.33. So all of them will add up to 0.99, about one lot, and place our stop loss for all of them at this resistance level. Okay, the first position will take profit at this level here at the 111, and the second position will have a take profit at the next level of support down here, and the third will have a take profit at the next level of support down here. By the time the first position hits the target here at 111, we move the stop loss from this resistance level to our entry. So at this point we have already locked in profit, our profit from here to here, and we have the 2/3 of our position running with expectations of much larger profit. When and if prices move indeed lower and they hit our next level of support, we move our stop loss to the next resistance level, which will be here. So by that time we have cashed out the 2/3 of our position, and we have locked in profit on the third part of our position. Eventually prices will hit the third level of support here, and we will be out of that trade with some considerable profit. So this is a good way to trade support and resistance, and use support and resistance to define your take profit and stop loss orders. You can then create a setup using multiple positions for this trade. The worst case scenario remains the same as opening one large position here. This will be if prices do not stop here and they continue up. It can happen. But we have a lot more other options, like taking profit here and then breaking even here. So this is a practical way to draw and use support and resistance for your trading. At this time, I'm gonna show you another very useful tool for your work with support and resistance, and that will require you to open an account with a broker, a demo account, a free demo account with FX Pro. I will provide you with a link to open that account for free. You can use any other broker as long as they provide the services of Trading Central. Trading Central is a technical analysis company that has been around for decades, and I personally found their services very useful. So if you click there, you will find support and resistance level, as well as some signals on all the instruments of the broker that uses their services. So for example, we can go to the EURUSD here, and we can see their support and resistance levels, and we can also see their signal. And at this point they suggest that the momentum is bullish, so they expect prices to continue to the upside. But if prices move below 111.8, then this will change the outlook to bearish. So a combination of their signal together with your own analysis of support and resistance may be very useful in order to create a high probability setup. So let's consider this one. Remember this scenario I explained where we count on a reversal? Let's take a look at what they say. They say that if prices drop below this level, then we are heading towards 111.60, 111.35, and pretty much they say that while prices remain above this level, we're looking higher, but if prices drop below this level, we're looking lower. What our scenario and our analysis that we just did says that if prices drop below 1170, we are 10 pips above them, above their signal. We are ready to we expect, after prices drop this level, we expect to reach 111, and then when they return to that level, we're willing to get short, to open a short position here. Actually, 3 short positions here. So as a combination, our analysis suggests that if prices drop below this level, we're looking for a bearish reversal. Their analysis suggests the same, so we have one more reason to believe that this particular scenario will work. At this point, I will conclude. I will finish with this video. I hope you find it helpful. If something I left something that you didn't understand, or that you want me to clarify, or even to create an additional video explaining something more, please let me know in the comment below. Thank you very much for watching.